Hey traders, let's take a look at the potential trade that we could have taken on gold. So now we're on a DXY, and most of the time I use DXY as a rough gauge on where price action will go on gold. So on the weekly time frame, you can see that price has swept higher time frame, sell side liquidity, and so this will be our draw on liquidity, right? This candle here. So going to the daily time frame, so knowing that our bias on DXY is bullish, right? We should be bearish on gold, right? But however, that was on the weekly time frame, and we are scalpers, right? So normally my trades at max will take around 4 hours, right? So we should be looking at the lower time frame to give us our bias, right? So I guess a good time frame would be the 1 hour, right? Yeah. So on the daily, you can see that price has formed this on a Thursday, right? So we should be really focused on this candle instead, right? Whether it swept any candle highs, lows, or did a body candle close above or below a candle, right? So that's the main thing that we should be looking out for instead of like looking at this higher time frame sweep. Okay, so here we can see that price has created this candle. So for example, on Friday, we can kind of expect that price, okay, that will create this daily bullish fair value gap for price to tap inside. So I guess bias for Thursday and Friday for DXY will be bearish, right? So in that case, we will be looking for buy positions on gold, right? Since we expect DXY to be bearish for Thursday and Friday, right? So that's kind of the mindset that I'm thinking, right? Yeah, and also for news, um, DXY is bullish, right? Because they talked about yeah, they talked about having more rate cuts, right? Yeah. So yeah, they talked about having more rate cuts for the first meeting, and then for the follow up meeting, Jerome said that he'll be very cautious of the rate cuts because employment data is now is getting better. So it's not that we'll definitely have two more rate cuts this year. So he said that he'll be cautious about the rate cuts. So we don't really know whether it's actually going to be two or just one rate cut, right? So I guess this is also one of the factors why DXY is kind of um, bearish for Thursday and Friday, right? That's my sentiments, right? Aligning our fundamentals with our technicals. Okay, so since it's bearish, right, let's go to gold. Okay, and you can see that let's go to 15 minute. Okay, so this was the price action presented to us, right? So there are two cases in my mind, right? So for the sell scenario up here, so for me to enter for sales, right, which means there'll be a bullish DXY. So this is in accordance with our high time frame, right? Where yeah, it's in accordance to our high time frame where DXY is bullish, right? So just now we saw that on the weekly time frame, price set major high time frame sell side liquidity. So we expect DXY to be bullish and gold to be bearish. Okay, but as I said, that is too high of a time frame. So we can see that actually gold is pumping up. So yeah, because this is an intraday trade, right? We are looking on the 15 minutes, not the daily or weekly time frame, to position our um, buy and sell positions. So yeah, so we should be looking for low time frame price action on DXY and on gold. So here we can see that if DXY is bullish, then price will hit to the 30 minutes bearish OB, which is what it did. Then as it comes down to the imbalances here, right? The 4 hour bullish order block and 1 hour bullish OB, right? You create a huge, massive bearish parallel gap or bearish OB retest before dumping down. So this is what I meant. Okay. So if gold is bullish in this case, where DXY is bearish, right, which is what we analyze, right, then we will expect to see this price action, right, where we sweep sell side liquidity inside of this 1 hour bullish order block. So you can see, yeah, this is the extreme OB where I expect the price to head towards, because price has if price is truly bullish, it will sweep liquidity, and here he has already mitigated the 30-minute bearish OB, so it's ready to pump to the upside. Okay, so here we can see that neither of those cases happened. Right, we didn't create a we didn't create bearishness inside of the bullish imbalances, and neither did we sweep the sell side liquidity resting inside of the extreme OB. So 1x. Yeah, so of course I didn't take a trade because it wasn't in line with my price action. Right, so instead we can see that, right, price closed above with a change of character. Okay, so mm, yeah. So on the 30 minutes you can see that actually there is imbalance, right? So this will be the imbalance. Right, so what price did is on the 15th, it created a bullish fair value gap to the upside. Okay, so you can see that this is a change of character, and then it mitigated the imbalance. We tested the extreme OB, this, I guess you can say this 15-minute bullish OB before pumping to the upside. Right, so I guess there is way more upside to come, probably head towards this direction. And so we do have to look at Forex Factory to see how news will propel our price action. Right, so here we can see that UE claims is this amount. So as mentioned, I I would guess that UE claims the value here will be lower. Actually, will be lower than forecast and previous, because I feel that the employment um, the employment rate has increased. Right, so I feel this will decrease, which will be good for USD and bad for gold. So if it's bad for gold, then we can actually look for re-entries. Right, if it's bad, then price will probably dump down a bit to some sort of imbalance before pumping all the way up. So I guess we can use that moment where price dump to enter at a fairer price. Yeah, so I guess that's my stand. Yeah, and if that's not the case, if it so happens that you know unemployment claims is higher than expected, which is bad for USD and good for gold, then I guess price will just run to our doll drawn liquidity. But it's fine, right? Because we're following our trading plan. So, yeah. So it's either we get a reversal for me to enter for buys, or we just miss out on the trade.